Good evening, friends. After a long time, we are in front of you with the future trend. And the reason why, because every Friday we had some special event which did not allow us to do, sorry, my apology, the future trend. And today we are going to discuss very interesting data analysis to help you understand. And what we are going to discuss is already known to you, am I right? It's been published on the site. So we'll just go and go more deep into that. But before I begin, just a small disclaimer that this webinar is just to enhance your understanding about the equity market. Past performance is no indicator of future returns, and whenever you invest in the equity market, it carries a higher amount of risk. Now, some of the points we are going to discuss is like India has always been compared with the China. And rightly so, there's nothing wrong with that. So, how China's market cap to GDP ratio versus India's market cap to GDP ratio. Second thing, the whole world looks at the net profit and then decides to try to understand the price to earning ratio. We said, okay, our research team deliberated and said that let's look at now what's happening with the operating cash flow of India. Is it growing, not growing? Because ultimately your profit may grow. But what actually accounts is that how much profit translating into your net profit. So that's the one that we are going to see that. So there are some of the interesting data that we are going to see this time, first time. Demat accounts, I think it's on a continuous rise. If you happen to listen to us, our equity outlook for March, 3 months in a row, the cash volume on NSE is basically more than 1 lakh crore on an average. And we thought if that's the case, let's look at this. Our sense is that IPO market may slow down, and I will tell you why. Iron ore prices are coming down, and I think that's a one good thing, which is for the steel companies. Now, some of the steel companies do have iron ore mines. They may not get so much benefit, but those who are buying from the open market, they will definitely get a benefit. And road construction is slowing down. This is despite the fact that Government of India has given a lot of importance to the infrastructure. This is not a very healthy sign, actually. So we're also going to discuss about it. And there's an implication. As you know that we always talk about the future trend analysis. If you remember, we did predict that before general election, price of petrol and diesel will come down. It happened yesterday. So we always look at the trend and try to look at the data and try to understand what one can expect going forward. And based on this road construction, I must tell you, there is a high probability. These are all probabilities. So say sometimes our, people should not carry hone hi wala hai. We are all talking about probability. The incumbent minister may not get the same portfolio, if at all he gets the portfolio, in the next reshufflement. Why? Because the road construction is slowing down. So let me just go very quickly versus China versus India's market cap to GDP. And what I've done, actually, I've looked at the data. India's market to GDP has always been higher than the China in last 10 to 12 years. Except in 2025, where China had higher market cap to GDP as compared to the India. Okay. But otherwise, India always commanded little higher than what China has been commanding. But nowhere we have seen in this period, if you look at it, where India would command, 60 versus 77, 78 versus 94, 79 versus 113, which has been increasing, 65 versus 103. But now 62 versus 128, almost double now. Now one can say India is growing faster, and hence India should command a higher market cap to GDP as compared to China. Agreed. But when you look at, because China was one of the fastest growing economy in the world, and if that was so, what is the highest ever market cap to GDP China ever commanded? and that was in 2007, 121%. We are much higher as compared to that in market cap to GDP. In 2007, India commanded 107%. And we all know what happened post 2007. We had this global financial crisis, and then while not only the economy came down, but market came down much stronger, much faster than what happened. And again, if you look at the India's average is about 80 to 83, or maybe closer between 85 to 90 kind of a stuff. But we are definitely commanding a much higher market cap to GDP. So one we always compare with India versus China, and one is absolute in the sense one is relative to China, and one is you compare what we have been commanding historically. See, I do agree India should command higher market cap to GDP as compared to what it has been commanding in the past. Why? Purely because of India is the fastest growing economy in the world, and that's so we should command. But should it command so high? I think that needs a little debate. And time and again, people are talking about growth. I think this growth is reflecting in the market cap to GDP ratio. So, when you look at the data, it just gives an impression that this needs to come down. While the GDP will keep growing, and Government of India estimate is that the next financial year, that is FY 2025, we will come to an end of FY 2024 in next 14-15 days. Maybe today is what date? Today is 15th. Maybe next 16 days, this financial year will come down. Will come to an end, and then we'll move to the next financial year. And that's where I think 10.5% is GDP growth, nominal GDP growth that India is likely to grow at. If that's going to happen somewhere, should we command such a high market cap to GDP ratio? I think that definitely needs a debate. My personal opinion is that I think we should not command such a high, because it doesn't leave a room for a capital appreciation from that level, which means that your cap the limit has been capped actually. So that's what this one. So then we look at other data, because see, ultimately one thought process leads to another thought process, thought process leads to another thought process, isn't it? And that's where you build your argument, and that's where you build your conclusion. So what we decided, let's look at what's happening in the operating cash flow. Is it increasing? That justify this kind of a market cap to GDP ratio. So what we did, we compiled all the companies of, and we have taken 2018 as a year, so that every company will have a different accounting, what we call closing. Someone would have March, someone would have June, someone would have September, and someone could also have a December. So what we did, we look at this year, 6 years in a row, and look at what is the market cap. And remember, we have removed the market cap. So you will say, how can market cap be so low? Market cap could be so low purely because we have removed banks and finance. Why? Because bank and finance normally have an operating cash flow negative. So it would have distorted the picture. And to make the picture a little more comparable, more sensible, we have removed banks and NBFCs from the operating cash flow. Now, operating cash flow is very, very, one has to look at why, because sometimes your net profit may not result into an operating cash flow. And if that is so, why should we, give importance to the net profit? So that's why we said operating cash flow. And now when you look at it, India's operating cash flow in post-COVID, so if you look at post-COVID, we 9.1, which declined to 7.9. In 2020, it increased to 10.7, then it increased to 13, then it came down and 13.2. If you look at last 2 to 3 years, it is stagnating. It's not growing. So while India's profit grew, but operating cash flow did not grow. But what happened to the market cap? Market cap increased from 159 or 160 lakh crore to 260. That's almost 25% jump that we saw in the market cap. And as I speak to you today, this data is as of yesterday, which have removed all the market cap of banks and NBFCs, 307 lakh crore. Of course, India's market cap is higher, but I've removed this one because I want to make comparison comparable, isn't it? Now we are almost 50% higher than what it was in 2020 as of now. Will operating cash flow is going to improve at 50% to maintain that 15% or 15 times what we call market cap to OCF, that is operating cash flow, looks little doubtful. In that sense also, I think we are at little premium to what it has been. Now this, normally no one uses this kind of a market cap to OCF. And even people are using, people don't talk about it. We thought let's look at this data to help us understand where do we stand. And this again corroborate with our previous slide about market cap to GDP. Thus gives an indication that we are little trading at the premium. And of course, once the data will come for 31st March 2024, because normally company declares operating cash flow twice in a year. What is that? 30th September, and then that's every 6 months it comes out. So 30th September and 31st March. Those who close their books on 31st March every year. So we will come to know as of 31st March what has been the data on operating cash flow for the full year. So, and we'll get more clarity on that. But right now it doesn't look like we are going to see 50% increase in operating cash flow. And if that's not going to be the case, I think India's market cap to operating cash flow may go to the highest ever level. Now, if you look at Demat accounts, and that's been complete, data which gives an idea what's happening. India, on an average now, this year in last 12 months, India added about 3 crore new Demat accounts. In other words, in 2000, total Demat account till 2017 were 3.1 crore. And in one year itself, that is, we added 3 crore new Demat accounts. Where are those customers coming from, investors coming from? UP has been the biggest outlier in terms of number of investors coming in. I think today this Indian market no longer remains, and of course Mumbai and Ahmedabad accounts for a larger chunk of cash turnover in the market. But I think the more and more that dominance is going to come down. Why? Because UP is emerging as one of the big addition to the new investors coming in. And that also shows the prosperity happening in the UP, because see, who can go to the equity market? Only those who have certain surplus to spend money on. If you don't have a surplus money, and in fact I was discussing someone and we're discussing about one thing that, and maybe on one of these days I will also try to cover that in my future 10 analysis. India's labor cost is going to go up. Again, this is a prediction we are making, my personal opinion. Why it is going to go up, and I'll again explain you why. UP, which was a laggard in terms of the growth, if you look at the per capita income of UP, I think it would be in the lowest quartile. Why? There was no economy, there was a law and order situation, and so on and so forth. But now UP seems to be coming back very strongly. Places like Ayodhya, places like Varanasi, and so forth, it's going to increase more local employment. Now, when the local employment happens, what happens there? People, those who used to migrate from UP in search of a job to Bombay and some other places, they'll stop migrating. Now what will happen? The labor supply will come down. When the labor supply gets curtailed, what happens? The existing labor will ask you for the higher prices. So that arbitrage that we are getting on the price front, I think it's going to get reduced going forward. In other words, your employee cost as a percentage of sales are going to go up, and that is going to impact the margin. I was talking to one renewable power company CEO, and he was making me understand that even India's power cost is going to go up. So in other words, India seems to have one major advantage, but definitely the labor cost. And I think that's going to go up. Why? Purely because less people are going to migrate from places like UP. See, when the local economy grows, there is no reason why you should migrate, am I right? And I think that's one reason that we need to keep in mind. And of course, some other day, I'll talk about it. But today, the number of investors coming from UP, of course, it's not that. Maybe next, this one, I'll show you how number of investors increase from UP has gone up. So it's a very, very big. So that means people are not only earning, but they are also able to save some money. And since they're able to save some money, they're willing to take the risk to put money in the assets like equity. Okay, so this is what the data clearly suggests, that almost, and if you look at if you base of 2015, we are almost 6 times higher than what it was there. So look at the growth that happened in last 6-7 years in number of Demat accounts. And I think the COVID played a very significant role. Why? Because only 3.9 crore and we are talking at 13.9. We added 10 crore new Demat account in last 4 years. You imagine the growth that we are talking about, 10 crore, 3.9 crore becoming 10 crore on an average, which means basically we added 125% extra of what it was there, 4 to 150%, sorry, 150% in 4 years, which gives me a compounded growth of near 35% or so, or mota. And that's the kind of growth we have seen in Demat accounts. Number of Demat accounts are on a constant rise. In fact, Economist did a very beautiful article, and if you happen to read that article, The Economist, that's a foreign publication, which compares that India still accounts only 5% of the population has gone to the invest in the equity market, while the article says that in the US it's 40%. So should we expect the same pace of growth? The answer is no. But there is still a scope for number of retail investors to increase. Now IPO market to slow down. That's our prediction. Why we are saying so? You look at the data. If I would have presented this data somewhere in January, things would have looked a little different. Out of 10 last IPO that got listed, 4 are quoting below the offer price. They listed only the below the offer price. Not only there, they further went down from the below the offer price. Now what happens in the equity market, in the IPO market? When you see, the IPO market is nothing but a success of previous IPOs. If IPO keep getting listed at the gain, it will encourage more investors to again go for the next IPO. The cycle continues. Now there's a couple of things which happen. SEBI pulled up one of the NBFCs about IPO funding and so on and so forth. SEBI chairman coming or SEBI chairperson going on the record saying that SME IPO, there seems to be some kind of a manipulation and so on and so forth. I think that gives a clear-cut idea that complete IPO market is going to slow down. When secondary market also become volatile, it also creates a doubt in the promoter's mind. Should he or she go for an IPO? Because you do run a risk of IPO not subscribe. And I would not be surprised in next 1 month, some company will make an attempt to go public and then it will not get the response and it will get shelved. Very high probability that can happen. Of course, these are all prediction, may come true or may not come true, but definitely do expect the number of IPOs that been increasing month after month is going to slow down. Iron ore prices have come down substantially, which is not a very good sign for the iron ore manufacturer like NMDC and so on and so forth. But it's and this is globally it's happening. In India also that is the same. And if you look at the steel companies are going to get benefit. Why is it that iron ore prices are coming down? Our sense is that clearly demand for the steel has reduced, and since the demand for the steel has reduced, the price of iron ore basically, which is get used as a raw material. So if you look at the mota, you need 1.6 tons of what we call iron ore to manufacture 1 ton of steel. That's what has happened. Now remember, iron ore is required only in the blast furnace. You don't need, there are 2 kind of steel manufacturing facility. One is the blast furnace and one is called EAF, electric arc furnace. In electric arc furnace, you don't need iron ore. Am I right? So, and most of the capacity in the world are blast furnace, which will eventually move to the electric arc furnace because that are more environmental friendly. And in Europe and other places, you would have seen that the government is giving incentive to move from blast furnace to the EAF. So my sense and our sense is that, this is my personal opinion again, iron ore price may keep coming down, maybe in the months to come, purely because the capacity addition of the blast furnace will keep coming down. If that's the case, then the demand for iron ore will get reducing, because you don't use iron ore in the electric arc furnace. Okay, so that's one way we do get sense that iron ore price may remain little soft. That should benefit some of the people who don't have an iron ore mines. They would get the benefit of the lower input cost, which either they can pass on as a cost benefit to the consumer, or they can try to expand their margins. Road construction, if you look at the data, I think the highest road construction that we achieved was in 13,327 kilometers in that FY 2021, and since then FY 2021-22 was lower than the previous year. This is further lower than previous year. So even though in the 9 months the data looks a little promising, our sense is that even for this financial year, FY 2024, highly probability that this would be lower than this value. So in other words, 3 years in a row, we are going to see a lower road construction than the previous year, which is not a very happy sign. And that's one of the reasons I've sensed that Modi has a habit of changing the minister who don't deliver. And most really, the minister who's handling the road construction may not get the same portfolio in the next cabinet reshuffle. That's purely a speculative statement, but that could be a possibility that we are seeing so. What are the major news that happened last week, or this week, sorry? The market turned extremely volatile, purely because of valuation concerns and the stress test which SEBI asked mid and small cap mutual fund houses. Many mutual fund houses did come out with that. Picture doesn't look very, very rosy, but I'm not going to discuss on that today. Small cap index went down by 6%, mid cap index fell by 4%. Nothing unusual for us. Why? We did predict that this is going to happen. In our PMS, we completely reshuffled our port market cap allocation. We are almost 80% now invested in large cap. And if you had asked me somewhere in the month of January, 80% was in mid and small cap. Today we are 80% large cap. Nifty and Sensex also had taken a beating. It's not that only mid and small cap has fallen. Sensex and Nifty both are down by almost 2%. So while someone is doing a fine job of maintaining the Nifty and Sensex at the decent level, there is a lot of things are happening below the surface, and that's basically explained. Many of your portfolios would have seen a drastic cut in this. In fact, mutual fund AMC performance, if you look at for the last 1 week, you would have seen major decline in their NAVs also. US inflation moved up to 3.2% from 3.1% of January. 2 months in a row, it has surprised on the negative side. Probability of a rate cut, which will be likely to announce, like the FOMC is going to meet next week, probability is 0. Will it happen in the month of May? Probability is low. Will it happen in the month of June? Right now, that also probability looks little doubtful. Of course, our equity outlook, when we presented in 2020, January 2020, we did mention that there is a probability that 22nd June, we could expect FOMC reducing the rate of interest. Even that now has come under question mark. India's retail inflation fortunately moved down marginally to 5.09 versus 5.1 of January. Not much this. Price of diesel and petrol did come down by 2 rupees as expected, as predicted by us. And Moody revised India's GDP upward to 8% for FY 2024. FPI pumped in 25,000 crore this week. Of course, we don't see that impact on the indices. This is mainly due to the BAT selling the stake in the ITC, and this was acquired by FPI. And that's the reason, even though the number looks very good, it's not reflecting in the Sensex and Nifty purely because of this granular information. Now, I have done with my presentation. Thanks for patient listening. I'm open for your questions. Okay, Johnson is asking, I have cash balance after I sold my small caps and part of my money came from my personal portfolio. Should I invest one third after 2 months and the rest after 2 months as suggested? See, Johnson sir, what you can do, okay, I'll explain you what we did. We did not take a cash calls on the market. Why? Because it's a very dangerous thing to do, because sometimes it can work in your favor, sometimes it may not work in your favor. So what we did, we moved out of mid and small cap. We locked in the profits in many of the mid caps, but we reinvested that amount in a large cap. So what we did in PMS, I'll advise you the same thing in your personal portfolio also. My request would be, please reinvest that amount in large cap rather than trying to time the market, because you are moving from equity to equity. What I suggested, that one third after 2 months for the fresh investment, if you wish to do, and where you wish to increase the equity allocation, that's where you can apply that criteria. But you already taken exposure to equity, then what you should do, move to the large cap. Shyam Sundar, volatility will be the name of the game at least till election results are out or exit polls are out. What is the suggested investment strategy in such a scenario? Is this the opportunity for value picking? See, sir, market will give you a good opportunity to buy stocks. Unfortunately, many of you would not be able to buy. Because when market will go down, why market will go down? When there will be a fear factor. And people will not have a guts to invest during the fearful time. On the contrary, they will try to even book losses. Am I right? You want to run away from the market. You would want to withdraw your money from the mutual fund or the PMS or your personal investment. Why? Because at that point of time. So market is going to remain volatile, whether we like it. I don't know whether it will going to remain volatile till election. Even it can remain volatile even post-election also. We don't know. Am I right? But we do expect market to remain little volatile next couple of months, maybe 3 to 4 months. And suggested strategy is that park your funds right now in a large cap. At appropriate time, we will come in front of you and tell you that we are moving into mid and small cap. And when we tell you, you can also do the same thing in your personal portfolio. Akash, I have invested large cap stock with low P and good growth prospects. Still, they are down by 9% a week. Should I cut the losses now? Also, can you please share your views on auto sector, specifically passenger vehicles, EV? Thanks. So, sir, don't get too much perturbed up. See, when the index fall by 4% or 2%, so there is okay, it's a very simple, remember this, what you call reality of stock investment. In the falling market, your portfolio will fall much higher than the index. In the rising market, your portfolio will rise much higher than the index. So 9% in a week, should you be worried? Answer is no. Absolutely no. Should you book losses? Answer is no. Provided you have got into the right company. See, again I tell, and time and again I repeat, Akash sir, your reason to get into the company, if it continues to satisfy, why you need to book losses? On the contrary, you are getting the company at the good valuation now. Am I right? So why should you be worried? In fact, some people will come and see the valuation attractive. They will come and that buying power will lift the script up. So why should you be worried? But you are saying the reason why I bought that company, that the story is no longer valid. Please exit then. So I don't think in 1 week something would have changed that would call for a change in the strategy. So you should not cut the losses. I assume that you invested in a good quality company and the reason why you invested continues to be there. Okay. So don't do that. It will be foolish thing to do, because then what you will be doing, you are basically selling high and buying low. We are selling low and buying high, which doesn't make sense. Our view on auto sector, we do believe that the passenger vehicle EV should do well. In fact, if you look at our highest exposure in our PMS, is it with one of the automobile company. So our view remains a little positive on the automobile sector. Kanan sir is saying railway stocks trend. We were bullish on railway in 2023. We are bullish on railway sector in 2024 also. You look at the amount of projects that government has announced. There are various stories that are going to play out within the railway. One is the metro. You go to any city nowadays, the metro work is on. You look at the freight corridor and the number of wagons that are going to get replaced. You look at the government railway track that's going to increase. You look at the speed of the train, that is Vande Bharat. More and more new trains are being introduced within the Vande Bharat umbrella. So it's going to keep increase happen. Bullet train is another opportunity that's there. I think railway station, complete modernization of railway station. So railway as a theme, I think, is going to play out very significantly well, not only in the months to come, but in the years to come. So we were bullish and we are bullish on railway sector. Rahul Kumar, there has been a continuous buying happening at lower level. There would be other PMS who would continue to buy small caps and mid caps, and also in case of mutual fund redemption, mutual fund are already sitting on a good cash ratio to avoid heavy consumption. Your views, please. As this is purely liquidity driven and stocks are way ahead of fundamentals, but can foresee reasons for liquidity crunch and huge redemption. I don't know, sir. When you say there is a continuous buy happening at the lower level, there would be other EPMs who would continue to buy small caps and mid caps also in case of mutual fund redemption. I'm not very sure, sir, what you wish to convey here. Our sense is that the liquidity-driven rally which was there with the mid and small cap, I think that may come to an halt actually. Even mutual funds have asked they don't want money in the mutual fund schemes, which will further put what we call liquidity stop to buying more. So, are you anyway suggesting that mid and small cap are going to go up from this level? We don't see that's going to happen in the near future. I think there will be liquidity squeeze which will happen, and eventually we'll have to look at what is the complete stress test that's going to come for the mutual fund as a sector. And what I think that's going to skip, because SEBI clearly believes that there is a froth. And if there is a froth, I think it's going to keep the upside cap for the mid and small cap. So I don't think we are going to see a major rally happening, at least in the near future, in the mid and small cap. And that's one of the reasons we moved to the large cap, because we wanted to protect the capital. Having said that, don't expect that we will not underperform. We will underperform. Why? But we will underperform a little less, because had we taken exposure, it's like basically, whether you keep remaining invested in a mid and small cap and you underperform much higher, or you take shelter into large cap, you will underperform, but the level of underperformance will be little less than what would have happened had you remained invested in the mid and small cap. But yes, it's going to remain a little challenging for the mid and small cap, at least in the near future. I hope I got your question right. In case if I have not, please again rephrase your question. I'll be more than happy to answer. Vineet is saying SEBI conduct mutual fund stress test to protect investors well. I want to ask, have MarketsMojo tweaked its IP to conduct stress tests on current recommendation mutual funds on our site? We have not done that, sir. I must tell you that. I don't think we have done that stress test to current recommend. That's a good suggestion, in fact, Vineet ji. Amil just put this question and put it to Karan. I think it's a very good suggestion to an IP. But that reminds me one more thing, See how leadership team at MarketsMojo thinks, If you look at our PMS strategy, first time in the history of the country, a PMS house came with the predefined limit of 1,500 crore. Okay, we will not going to take money more than 1,500 crore in our soul and in our power. What was the logic there? If you go back that, and we are a little ahead of it the time, But the reason why we said that, we know we are going to invest in a mid and small cap. And we know that The moment we go beyond 1,500 crore, we will run into a problem because of this stress test. That how many days it will take for us to redeem in case if we will decide to get out of that particular mid or small cap. And that's the reason. So we were a little ahead of the time. We realized this and we actually inbuilt a stress test in our PMS. Yes, we will not go beyond 1,500 crore in Sol and will not go beyond 1,500 crore in our power. So that's the thing. But that's a very good suggestion, Virit. I'll ask Karan to basically do this. So in case if we can further improve our IP or not. Amil, just please forward that question to this one. Sunil Saraswat sir, I'm interested in joining PMS. I have received all the required documents from your relationship manager, Mr. Suraj. We have discussed and resolved most of our clarification with him. However, one issue that came to my notice today was that regarding terms and conditions in the PMS backend. That is close of PMS account, mutual consent. Automatic close of PMS account in case of date of the account holder, even if it is joint account with a nominee. For details, refer PMS background. May I request you, your compliance expert, to clarify them? So, sir, this is what SEBI guideline says very clearly. When you say mutual consent, is that it's the mutual consent is just a terminology that we use. The moment you want to decide, we will not say no to you. It's just that when I said you want to inform us that yes, you want to consent, and we'll follow the process. So it's just a technical term, mutual consent. There is nothing that you need to read too much into that. And SEBI guideline says if there is a date of the account holder, we need to close that account, PMS, and you can again rejoin the because what will happen? The Demat account is open in a joint account. Am I right? So we need to basically have a new agreement with this because the joint account wish to add one other joint account in that case, or so and so forth. Or even if there is a nominee wants to continue or not continue. So SEBI guideline says if there is a date in the PMS of an account holder, you need to close that account. And of course, you can restart that account. That's a different story. But procedure has to be done. That there has to be a new agreement between the survivor and the PMS. And that's not only us. This close is not with us. You go through every PMS house, sir, and it's the same is there, Saraswat, sir. So that's how it is there. Remy, this is what is compounding in stock market. I understand the bank FD compound very well, but when I buy stock and sell it after a couple of years for a profit, where is the compounding in it? Okay. So what is power of compounding is that, the longer you remain in the stock, when I say stock, the equity market, not individual stock, higher the chance of you creating higher returns. And moment you expand that higher returns over a longer period of time, it brings a huge amount of wealth. So, sometimes someone would say, 8% return CAGR versus 10% CAGR is only a difference of 2%, am I right? But when you look at the data over a period of 20 years, it completely changed the amount. The multiple is basically goes up significantly high. It's no longer a 2%, it creates a huge wealth difference between 8 and 10%. Now your question is that where is the compounding in it? Sir, equity market में compound doesn't happen in a like FD में कैसे fix होता है. In equity, the compounding happens in non-linear fashion. So some year you will make 150% return and another year you may make only -10 or something or maybe 0% return. And that's where the compounding happens. The more you remain longer in the equity market, the higher the probability of compounding coming into play. I hope that answers your question, sir. Santosh Kumar, please do not delete the webinar at least till the end of the day to provide users to access or listen later in the evening. I don't think, sir, we are deleting the webinar. Santosh, Abhi, do we delete the webinar nowadays? No, sir. No, we are not deleting it, sir. You can definitely watch it right at the end of the day. I think it's available forever, am I right? Yes, sir. Now it's available. We used to do that, but then, see, we listen to our customers, and when you people suggested, why are you doing that? We said, okay, we will not delete. So I don't think we are deleting any of. In case if you wished any of the webinar, even the previous, will be more than happy to share that link to you. Kedar, MM was was of the opinion that there was no growth in small cap till Feb second week, while others started saying before and suddenly changed its view by Feb. And any view on this? Is growth there in selective pocket sector rather than all small cap. Also, there is not that more companies are coming with IPOs and market cap increase, not only function of secondary price increase. Okay. So, you know, if you go back to our equity outlook 2024, what did we say about the mid and small cap? What did we say about the market? We did not say that mid and small cap are going to give the same kind of returns that it gave in 2023. We did not say that. And we did mention that we are going to change. If you go back to our PPT there at that point of time, that PPT, that webinar is available, am I right, Amir, on the site? Huh?
Yes.
Please go through that. It's available. And we mentioned at the fag end of our PPT that we are going to reallocate our market cap allocation at appropriate time. And that's exactly what we did for our PMS customers. So I don't think we did something, in fact, we walked the talk. We predicted that in January and we did that. We did not subscribe to that view in the month of September when one leading broking house came out with the report that there is a froth in the mid and small cap. We did not at that point of time subscribe to that view. But when the new data points come in, we did mention that yes, we are going to reallocate our market cap, and exactly what we did. Is the froth in all pockets or sector rather than all? Most of the places the froth is there. Maybe there will be few exceptions here and there, but overall mid and small cap does look a little expensive and there is a froth there. So I don't think froth is only in few sectors. I think in most of the places it is there. Sorry. And what was the another part? Amir, बहुत जल्दी में आप सवाल निकाल दिया आपने. And more companies, okay. And is the more companies are coming with IPO and market increase, not only function of secondary price increase? You are right, sir. But if you look at the total market cap of the company that came out with, still it would not justify what has happened. And ultimately, it's a function of those companies will also have the operating cash flow. Am I right? It's not that they are not going to have an operating cash flow. So it has to increase by 50%, which looks a little difficult. That's what my limited point was, Kedar sir. Vikram Singh, I think one should read investor growth from Demat account numbers, growth numbers with some pinch of salt. Expensive growth in new Demat account may be due to the aggressive marketing, customer onboarding by new age brokers also. The customer mostly are already existing customers and having multiple new Demat accounts due to contractive offer by brokers. I think more relevant data is retail money inflow into the market rather than number of Demat growth. Absolutely right. So Vikram Singh ji, if you look at the NSE data which came out with, I think total unique investors in the country are 9 crore. Which is the pen is the same, because what you're saying is right. If I open 2 more Demat accounts, the number of investors not increased, but Demat account has increased. But the unique investors, if my memory serves me right, is 9 crore as per the NSE data, National Stock Exchange data. Now, what it was, the numbers was couple of years back. I don't think it will be more than 3 crore, the number of unique investors based on the PAN. So that itself gives you an idea that how many what we call number of investors increase. So I agree with your point of view, but the analysis remains the same. That number of retail investors have increased in the market. There's one more data I'll give you. Okay, so if you look at the NSE gives this data on the website, and you can search that. So India's volume cash flow has gone up. Am I right? More than 1 lakh crore 3 months in a row. That is December, January, and February. If you look at the percentage of retail investors, which accounts for that volume in the market, has gone up. It was gone up from 36% to 37% kind of a stuff, which has increased. So that's also further went up. In other words, not only the absolute value gone up, but retail sales in that retail trading also has gone up. What does this mean is that more and more retail investors are active in the market. So I'm just searching for that data because I gave some views to one of the media house. So I'm just searching for that data. Just give me 2 minutes. I'll give you. So if you look at the data, so I don't think that I put that data in my answer, but it has gone up. Yeah, it has gone up, and I don't have data. but it has gone up. It has, I think, if my memory serves me right, it was 35, 36%, gone to 37, 38% kind of stuff, despite increase. In fact, if you look at the volume, the highest volume is accounted by the retail investors right now in the total, of course, followed by the prop books and then the institution, others, so on and so forth. What I'll do, Vikram Singh, since you have given me this, next time when I come in front of you, future analysts, I'll come with the active investors, the unique investors in the market. So I think that will answer your question. And what I'll do, I'll look at the same data for last 5-6 years. So that will give an idea. And my sense is that growth, percentage growth will remain more or less same. See, another thing, if you remember that number, the new investors who are coming, I don't think they will have more than one account. Because the marketing zero पे किया, उससे ज़्यादा कौन क्या दे सकता है आपको? So I think the customer who would have come, maybe the new customer may have only one Demat account. That's my sense. But anyway, I'll come that data. I'll bring the data in front of you. Priyanka is saying, "Sir, will you explain what is operating cash flow?" Okay, what is operating cash flow, ma'am, is that every company declare net profit. So how the operating cash flow gets computed? You have a net profit number, then the depreciation is not a non-cash item, am I right? You don't spend depreciation, just a profit and loss account. You don't, basically there is no cash outflow for depreciation because you have a fixed assets. You depreciate that value. Suppose if you have a laptop, okay, the value of that laptop keep depreciating. So you don't spend money that out, but you have reduced your profit to that extent. So what does the cash flow statement does? It adds back that amount to because there is no outflow because of depreciation. So you add that amount to the net profit. Then there is a change in the working capital. What is the change in the working capital is because of your debtors may have gone up or gone down. Your inventory level has gone up or gone down. Am I right? Then your creditors value may have gone up or gone down. You adjust for that change in the working capital. And उसके बाद जो value आती है, that is your operating cash flow. So what does this mean actually? If your operating cash flow is higher than or closer to your net profit, it is good. But suppose if your net profit is 100 rupees, and if your operating cash flow is 50 rupees, that means even though you are making money at the net profit level, it's not resulting into a cash flow. That means your money is getting stuck in the working capital, which you may in future date may write it off. So if you look at some of the good companies, okay, when I say good companies, some of the blue chip companies, they will have operating cash flow much higher than the net profit. In other words, they are so running their ship so fine that not only the profit is there, it's actually resulting into the actual outflow. So just to give an example, okay, suppose, and I'm talking about the employee point of view, so you people can relate to it. And I'm saying this is based on my personal experience. So, I was working in a previous company before MarketsMojo I joined. That company, I was in X salary. That is my net profit, am I right? But the company was not paying me the salary only. So what used to happen, I used to file income tax return. I must tell you that also. And I'm fighting a one-take case against income tax department. What has happened? The company did not issue with the form 16. I assume the company will issue the form 16. They will pay the TDS. I have shown that as an income. The income tax department says now you need to pay income tax on it. But so income in why should I pay income tax? And then there's a debate fight happening with the income tax department. Now in this case, I have an income, but not resulting into a cash flow because the employer did not pay me that income only. That did not pay the salary only, and which is the classical. So in other words, there are many companies who cook books, accounts book करते हैं ना, manipulate करते हैं, उनकी net profit ज़्यादा होती है, cash flow बहुत कम होता है. Why? Because that they must have inflated the net profit by doing some manipulation with the inventory, doing some manipulation with the debtors and so on and so forth. Then that clearly, so you must have actually reported sales, but that sales is not resulting into a cash flow, and that's why it was there. So you please focus on, when you still look at the operating cash flow, it gives a very good sense of, well, what is the health of the company. don't give only importance to the net profit. I hope I've understood. Otherwise, you can use some of the videos available on YouTube, which will explain you more in detail about the operating cash flow. Santosh Gaikwad sir is saying, in PMS, do you option to reduce the stock holding from 10 to 15 stock to 7 to 10 stock? If investor wanted to have more concentrated portfolio, kindly provide inputs. So Santosh sir, whether the stocks should be 10 stocks or 15 stocks or 7 or 10 stocks, the discretion lies with the fund manager. It doesn't lie with the investor. So you cannot, as an investor, you cannot say, boss, मुझे 7 stocks का portfolio चाहिए, because it runs on an IP. So that provision is not available. But in many cases, we have reduced the number of stocks, or we have expanded the number of stocks based on the market condition. But that's purely rests with the fund house, not with the individual investors. Sunil sir, stress test is done by mutual fund house. Should we look at the companies with low or nil mutual fund? Bhargavi Lakshmi, no, I don't think so. You should do that, because that will be counterproductive. So we can't be have a too extreme. Like no mutual fund holding also means that there is something not right. That's why mutual fund is not invested in that. Am I right? So what one should look at it, what percentage of so the right way to look at it, what is the volume of that company daily on the market, versus what is the holding by the mutual fund or by the FII, and it's a function, should be function of that. Because if 2-3% holding and there is a good volume, there is a high probability that you will be able to exit at that company without much of a damage on the price. But if you have too much holding, and then there is a danger. So and that's why the challenge is that versus the floating stock, how much holding mutual fund is holding, and do that. See, remember, in fact, fortunately, the stress tests are being done when the volume is very, very high. In last 3 months, as I was saying, 1.1 lakh crore ke upar ja raha hai, daily average volume. Imagine this test was supposed to be done 6 months back. Band baj jati in log sabki. Are you getting what I'm trying to say? That things would have become more worse. Fortunately, the CB is asking at a time when the volume is really good on the market. That will also give them the benefit. Why? Because the high volume is, that means you will get less number of days to practically sell the shares. Srimant sir, big thank you Sarji for your valuable. I would like to know why most Demat accounts are open in CDSL. I am looking for a great opportunity in CDSL. Thanks. It's purely because of the cost structure. If you look at the CDSL, the fee structure, it seems is more competitive as compared to NSDL. That's why people are opening more, and some of the brokers have tied up with the CDSL, some of the new age broker. So if you go to any new age broker, I think they would have tied up with the CDSL, because they are giving better fee structure to the broker, which in turn getting benefit to the customers. Once upon a time, NSDL was much bigger as compared to CDSL. But this now changed, and now the CDSL is much bigger player as compared to NSDL, purely because of cost structure. I will not comment on the company specific, so don't expect me to reply on that. Lata Sundar, irrespective of the PI factor, would you still make buy recommendation for folks outside the PMS? Of course, we have a website, ma'am. The buy recommendations are available. Definitely is available for the investors, those who are not part of the PMS. Umakant, markets have moved to large cap stocks. How to select such good large cap companies, or is it possible that you say such company list, or we just go on the basis of Mojo score? उमाकांत सर, तो आप हमारी दुकान बंद करवा दोगे? अगर मैं आपको लिस्ट दे दूंगा तो कोई पीएमएस में आएगा ही नहीं. हाँ? Sir, please use Mojo score available on the MarketsMojo website. As you know that SEBI clearly prohibits us to talk about stock specific. We will not be able to give stock specific. Our Mojo score available is a good for our retail investors. And those who are PMS customers, we do have an IP, and based on that IP, we are investing in the large caps. Kirti Kumar is pushing, when can we say that growth is over in mid and small cap? So there is no standard formula that I can share with you कि ये होगा तो ये होगा. I think it will come in front of you because you also need to look at how the numbers are coming out for the mid and small cap for March 2024 quarter and maybe subsequent to that June 2024. What's happening in the economy, because the economy also gives an idea what kind of the government policy are there, because some government policy action could be beneficial for mid and small cap, sometimes may not be beneficial. So we need to also wait and watch. And then we need to look at what kind of correction that has taken place in the mid and small cap companies, because it's also a function of the valuation. So there is no standard formula I can tell you, but what my promise to you is definitely that we will come in front of you and we'll tell you this is the time has come for you and for us to reduce the stake from the large cap and move to the mid and small cap. That we will do that. So don't worry, you don't do any homework. We will do homework for you and we will tell you when to do that. Manish is saying, if my question is if some small cap, mid caps having good value as per the results performance and still not rewarded by the market, should I stay buy in those stocks or your suggestion? Yes, you can do that. There is nothing wrong with that. We are not saying that you need to get out of lock, stock and barrel from mid and small cap. The fundamentals are good. If you think that the story continues to be there, please continue to remain invested in that company. There is nothing wrong with that. Nanda Kumar says, for utilizing your PMS facility, is there any room for reduction in investment from 50 lakhs to say 10 lakhs? PMS commission need not be reduced. I think more investors can benefit. Nanda Kumar sir, ये 50 लाख का जो लिमिट है वो मेरा लिमिट नहीं है. SEBI has put this limit because SEBI only wants PMS only for the HNI customers, and that's why they've set this limit of 50 lakhs. If SEBI tomorrow reduce to 10 lakhs, I'll be more than happy to welcome you people. But we are bound by so no PMS, not only me, no PMS in the country can accept a customer with 10 lakhs. The minimum ticket size has to be 50 lakhs. That's the guidelines from the SEBI. And sir, I'm afraid I will not be able to reduce this. With this, Amir tells me there are no more questions from you people, and hence he's suggesting me to please wind down my webinar. So thanks a lot to everyone taking time out. Have a great week and enjoy your weekend. Thoroughly enjoy that. I'll again see you next week. Monday, I think Karan will go with Mojo Stocks. Tuesday, I'll be in front of you with the question answer. For PMS customers, I'll be there on Thursday, and most probably we'll have a power series this Friday, the next Friday, where Mohit would also be there. So keep in tune. We'll come back to you soon on this.